Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the Exchange ETF conference in Miami, Florida, and helping me kick off coverage, we have Sean O'Hara, president of Pacer ETFs. Sean, it is great to see you as always. Welcome back to Trade Talks.
It's great to be here. Nice to see you as well.
You got it. And Pacer's growth over the last year, currently $22.5 billion. Where is this growth coming from?
Oh, pretty much everywhere, really. I mean, it's mostly, if you did the product piece of it, if you will, it's the value stuff, the cash cows. So large cap US, global, international, small cap. We're getting some factor stuff. We're getting some trend pilot exposure through the Nasdaq product that we have. So it's coming from a lot of different places. And then financial advisor-wise, it's split pretty evenly between the big wirehouses, the independents, and registered investment advisors.
What's the difference between the cash cows, value funds, and the new growth fund?
So the premise for the cow story was that traditional value was based on price to book. And there's very little tangible asset value left in the stock market these days. So you need to find a different way to find out what's cheap. Free cash flow yield does that. On the growth side, if you look at the way the index providers construct their growth index, they use sales growth. And sales growth doesn't actually add to returns over time. It's profitable sales growth that matters. So we're going to use a metric called free cash flow margin, which is the free cash flow a company generates divided by its sales. So you'll see whether those sales are actually providing excess free cash flow. We're going to launch a whole suite of products that will be our growth version of the cow story.
What are some of the companies that are in the cash cow growth fund?
Well, right now there's a fair amount of energy in there because they make all the money these days, but it'll rotate. It's one of those things that is fairly dynamic. It'll go from sector to sector based on what's going on in the current economic cycle.
So what's next for Pacer and cash cows in 2023, and what are your thoughts about the markets overall?
Well, I think we'll build out that growth suite. And I think we'll go back and pick up a few more of our factor ideas. We've got 3 products there. I think you can extend that product line. And then we'll see what happens, going on beyond that. As far as the market, I think, everybody is discounting Chairman Powell's fortitude, I think. He's not lying, and they're not stopping. And so everybody that thinks at some point they're going to turn around and start cutting rates again, I think is being a little bit too optimistic for that strategy or for that point of view. And so what we need to see really is that this Fed tightening cycle, it happened in a year. It usually takes them 3 years to go that aggressively. So we don't have enough time now to know how badly that's going to affect the overall economy and then corporate profits. So we'll see what happens when we start to see some of those revisions. And then inflation's really only been around for a year or so as well. And so that's all potentially a negative for future growth. So I think the stock market's going to be in one of these sort of back and forth until we get more real data modes.
It feels like the market is so disconnected from what the Fed is saying. To your point, Powell has been very clear in telegraphing his message. They are not going to make the mistake they made in the 70s and reverse course, because we saw what happened with inflation there. And it feels like either the market's not digesting it or everyone's looking for something positive to hinge their hopes on, and that's kind of not how it works.
Yeah, it's like, who was the guy before Volcker? Nobody knows his name. Why? Because he stopped raising rates, paused, and then inflation continued. Then Volcker came in and said, we're going to keep our foot on the neck of this thing until we actually kill the beast. I don't think Jerome Powell wants to be the guy before Volcker who nobody remembers who he is. I think he wants to be the Volcker of this era. So.
Well, not only that, but we know the mistake about being transitory. He doesn't want another mark on his legacy either.
Exactly.
He's not going to reverse course the way the market thinks he is.
I don't think so either.
All right, Sean. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.